I'm Chris Preston.
I'm Brett Zimmerman.
Welcome to Street Check, the best, I'm not going to give it any qualifiers today, the best podcast in the history of Cabot Wealth Network, which has been in business for more than 55 years. Brad, today is technically it was last Friday, but today we are celebrating our 100th episode of Street Check, stretching back, I think, is it 2 years now? Almost exactly. We've been doing these.
Yeah.
Um, did you think we'd make it to 100?
Uh yeah. I I I think
Did the
so. I mean it's
listeners, I guess that's the really real question. Yeah,
yeah, I don't
email us. Streetcheck at cabotwealth.com. Did
like
you think we'd make it this far? Or leave a
produ
comment.
production wise, like it's not a super heavy lift. We spend all day talking about this stuff anyway. We're just doing it on camera and we're hijacking some of producer Madison's time. But I like we can do this as long as we want. Do this forever.
Yeah. And we're going to have producer Madison on at the very end, just to reminisce about all the great times of the last 2 years. But before we get to patting ourselves on the back, um, Brad, tell people what we're going to talk about today.
Today we are going to talk about the market taking a breather. A little bit of calm has been restored. We are going to talk about Jerome Powell's latest comments, what that might mean for interest rates, and at this point, his job appears to be at risk. And we are going to talk about bank earnings now that earnings season has commenced. Before we get to that, Chris, you are up. Your take this week. Buy in May, don't go away. You have 90 seconds, and you may begin.
Yes, there's obviously a play on the whole sell in May, go away theory that the weakest 6 months on the calendar are from between May and October hasn't really played out that much lately. It's been kind of, in reverse of that often in recent years. But here's what I mean this year. As Mike Santolo writes often, says on when he comes on here, tells our audience that market bottoms are usually a process. V-shaped recoveries from such a sharp drop off are rare. We did see it March 2020, April 2020, after the COVID crash. Doesn't look like, given the sort of sideways action we've seen the last week, while calm is sort of relative calm has been restored to the market, it doesn't look like we're going to explode higher just yet. Maybe we'll retest the bottom from a week or so ago in the next couple of weeks, but I think it'll take a few weeks to play out. Come May, I think we're going to start to, a lot of this depends on the news, mostly related to tariffs, but I think just in general, I think we're going to start to see some of the angst fade a little bit and buyers step up a little bit starting in May. Um, and I think that'll last until about mid-June when that 90-day pause on all non-China tariffs, angst over whether that, with that deadline coming up in early July, whether that pause is more
Time.
permanent or just anything, just a 90-day pause and that's it. Angst will seep back in until early July when the deadline, I think Trump is going to either extend the deadline or do something meaningful to lift a lot of tariffs. I know he's negotiating with Japan right now. So buy in May, but don't stay away because you can't just buy and just ignore your portfolio in this market.
Yeah, yeah. It's I think
I
I
guess
think
my
that
overall point is May will be a good month, maybe even into early June. June will be, I think, will be down over the pause angst. Early July, you might really see pullback if it gets close to that deadline. But I think something good will happen before the deadline and stocks will rally second half of July. That's what I think.
okay.
Making any prediction in this market is, fool's errand, and you
Yeah,
know
that's the thing,
I'm
right? Like
doing.
so much of this is headline driven. The workable bottom thing, Mike has called out a lot of like secondary indicators
Yeah.
in what he's written. I think the safe odds are that we are probably near or at a bottom, or we've found it, and we're just gonna sort of settle on a level. Because like the alternative is that headline news dominates the market more, right? I think, and with going to the calm in the market of it all. Trump blinking on tariffs was massively reassuring for the market
Right.
because it showed that yeah, it's the maybe not everybody takes it as a negotiating position, but he is approaching it as a negotiating position, which means it's probably not an end of the world trade war totally reshakes the world order, which was like the extreme fear on Wall Street was
Yeah.
that the US loses its dollar supremacy and like all, there's a lot of sort of negatives that you can game plan or that you can game out from that. But I do think that Trump just rolling the pause out reassured the markets that it will probably not be as bad as feared.
Right.
Um,
Yeah. Who knows what'll happen with China? But I think that what the market cares most about clearly right now, even the Chinese market, the Hang Seng, I can never Hang
Hang
Seng.
Seng.
I think is up in the last week despite the escalations. Was it 245% are we up to? No.
Yes. Well,
Um, Basically, no trade is happening between the US and China at these levels. But, both markets, and maybe most notably, China's market, are flat to up despite the escalation. So I think what maybe that's partly, expectation that a deal will get worked out there or some sort of deal that, isn't north of 100 or 200%. But what the market clearly cares about most now is the rest of the world outside of China and whether those tariffs will actually take place. And with those sort of on the back burner for another, few months, has had a calming effect.
yeah, I don't love that so much of I think what the market outcome is dependent upon how much other countries want to punish us for taking these stances, right? Like if the EU comes in and wants to implement their own reciprocal tariffs on like tech, for instance, right? Like that would obviously be really bad news for the US markets. It very much feels like we have played our hand from a trade standpoint, and now we're just sort of waiting on the fallout. So I don't love being dependent upon trade partners to determine the direction of our market, but it does feel like we're heading that way, barring some new headline or new announcement or who knows what. I mean,
Yeah.
like the one today, obviously, or not obviously, but the one today is Jay Powell, right? Who has, by all accounts, engineered a successful soft landing. Um, Trump saying he is nicknaming him Too Late Powell or Too Late Jerome Powell. Um, I think that's probably a nod to the tariffs or inflation is transitory a couple of years ago.
Yep.
But there are concerns that his job may be in jeopardy. The
And
Fed
Trump
is a
literally
stent.
said it cannot be. How did he didn't say fired, cannot be terminated quickly enough. Is that what he said?
Yeah,
Yeah.
and there was a recent
I don't really know his power, whether he has the power to do that unilaterally. I don't think he does, but
it's
not my area of expertise.
no but maybe. So the Supreme Court recently ruled that he could unilaterally fire a couple of independent agency, I think division heads or like deputy administrators. Um, and Trump has asked for a review of his authority to fire fully independent agency heads, sort of prescriptively, right? He's
Yep.
basically said, "Hey, Supreme Court, tell me this is okay." And I think if they give him the nod, then Powell is probably on the chopping block, um, which I think a big part of the market's activity lately has been reassurance from the Fed because the Treasury markets were showing some strain, and then some Fed speakers came out and said we stand ready to step in under extraordinary circumstances and sort of rescue things before they break. And that's kind of despite Powell in his comments yesterday saying that the Fed put is not fully in play anymore. So I think he is sort of towing a fine line and probably appropriately doing so between bailing the markets out if needed and shoring up the value of equities. Um, I do see the Fed put as being sort of minor right now, but in the event that Powell is gone, then that stability that is offered by having somebody who's been a as much criticism as I had leveled at him for the transitory inflation stuff years ago,
Mhm.
or a couple of years ago, I do think he's been a very responsible steward of the economy to the extent that any member of the Fed or any head of the Fed is. Um, in the event that he were fired immediately, I think that re-spooks the market. Like there's a lot of stuff that can go wrong, and it's just a matter of whether or not it will. But the market seems to be pricing in business as usual, but some higher costs and not a further escalation of the trade war.
Yeah, I mean, just looking at the bring up the Fed Watch page, seeing what the odds. I think the odds of a cut next month, their next meeting date is May 7th. Odds of a cut have gone down. We're basically 90% that they're going to hold rates
Yeah.
at current levels next month. Um, June, it's still quite high. Expectation is now close to 70%. I think that's down a little from what it was, but still close to 70% of at least one hike by June. 30%, 31% still saying they'll hold rates steady by then. One way or another, whether it's Jerome Powell or not, I think we'll probably get a one cut in the next 2 months. Um, but his comments, sort of hawkish comments yesterday, definitely spooked the market a bit. But it does seem like he's trying to do the responsible thing and navigate it, thread the needle sort of the way that they have
Yeah.
done fairly well, maybe more than fairly well the last couple of years or last year plus at least. Um, but let's talk about, just the impact on the market or just the market in general over the last, since the tariffs were lifted. Was that a little over a week ago? Was that last
The
Wednesday?
ninth was it Wednesday the ninth
Wednesday the
that
night. Yeah, feels like forever ago. But calm, and again, I use air quotes on that. Calm has been somewhat restored. The VIX is down to 31. Normally, VIX 31 is historically quite high for the VIX. That's the volatility index. Um, but that's down from, I think it was close to 60 just a little over a week ago. Um, so, volatility is about half of what it was, at least by that measure, a week ago. And the market, as we've seen, we're not getting the giant, most days, we're not getting the giant, 3 to 5 to what, 10 to 12% or more swings intraday anymore. It's a little bit more of a normal market of the last week or so. And I think that even sideways, a sideways market after that, the record day last Wednesday, even sideways since then is, I think been kind of what the doctor ordered for investors is calm amid, just a sea of chaos before that has been good. Not enough to, I know Mike, all of his um, sort of indicators, market measuring sticks are all still in the negative, still in the red.
yeah.
Um, but we're in a better place than we were, a little over a week ago. That's for sure.
Yeah, definitely. It stemmed the bleeding.
Yep.
The tariff pause stemmed the bleeding, and markets it's been unable to move higher. It's been sort of capped to the upside for the last week, but it's also not testing new lows. It seems to be it. I was looking at the market earlier today at some of the charts, and it very much feels like we're back in that February period. So before the tariffs hit, when we were just seeing sort of like rational selling, people
Mhm.
reallocating portfolios, things like that. It feels like we're sort of back to that mode.
Yep.
So probably net selling pressures from institutional investors. There is the sort of sell America trend that we've been seeing lately where the dollar is significantly weaker. It's lost 10% of its value against a basket of currencies since the start of the year. That is partially responsible for share prices rising because the weaker dollar ends up The weaker dollar, if you've got international investments in U.S. equities, that sort of bids up share prices if the dollar is weakening. That probably continues to grind along. I don't know
Mhm.
that. I think the maybe big move in currencies, at least for the time being, barring new news, is probably over. Um, but we are still seeing some orderly selling and reallocating. Nvidia took a hit yesterday on news that it was taking a $5.5 billion write down because it was banned from selling some H20 chips in China, and then it's down another 4% or 3% today. So I think that repositioning trade is still there. I think the net selling pressure is still there, but the panic is over for now at least.
Yeah. And one thing we talked about, this leads right into um, our next talking point. We talked about last week that, what was your take last week that earnings would serve as the next potential, well, how did you word it last week?
I barely remember what I said earlier
Okay.
this
You said
episode.
something to the effect of earnings, this earnings season is the next potential catalyst for
Yeah.
a rally. And while, I mean, it's very early, we're in the first week, still in the first week of earnings, mostly just the banks and a few others that have reported, which we're going to get into. But they haven't been a force for bad yet. And the banks, as I mentioned, sort of what we've seen from the banks and the bank stocks response to their earnings. So basically, all the big banks that have reported, which is most of them, have beaten estimates, earnings estimates for the first quarter, most handily. J.P. Morgan, Bank of America, Goldman Sachs, Morgan Stanley, Wells Fargo, all of them topped estimates. But the guidance has been, a bit muted on because they don't know what to expect really, because of the uncertain tariff environment for the rest of the year. And as a result, the stocks, despite beating estimates, haven't really taken off. They haven't fallen either. And that's sort of the hard data versus soft data dichotomy at play, sort of a microcosm of that within the bank earnings that we've been talking about, where the hard data is Q1 and their earnings in Q1 through March, were good. Soft data is that, you know, consumer and investor um, sentiment is at multi-year, in some cases multi-decade lows, and they're of course worried about what that impact will be going forward, but they also don't know that it'll stay that low because they don't know what's going to happen with tariffs. What's your read on the bank earnings, and if you want to get into some specifics of the numbers?
Well, a couple that I had pulled, I would want to point out Bank of America specifically. Their trading revenues were up 9%.
Yeah.
They earned 7.4 billion, 90 cents a share. Trading revenues higher by 9%, net interest income higher by 3%, but their investment banking fees were down by 3%. So they are very
Yeah.
much sort of reflecting the market as it is, which is there has been volatile trades since the beginning of the year, so the entirety of their first quarter. Um, and obviously that accelerated of late. But the thing that that we have not seen from the banks is anything that's been a surprise.
Right.
JP Morgan, their income 14.6 billion, that was up 9% year over year. Revenues of 46 billion were up 8%, but they're also benefiting from higher trade volatility and more trading. And I am presuming, but I haven't looked into it far enough to really make a call that international trading is probably more profitable for them just because there's a larger barrier. So they've probably got a better take rate on people allocating funds out of the US and into global equities, probably generating more fees from that. So I think like the conditions are set up to justify, regardless of your overall stance on the market. The banks have been sort of delivering in a way that can sustain the narrative, right? If you're a bear, you say, well, this is only the first quarter. It's not pricing in tariffs. We haven't seen the economic impact of it. Of course, trading revenues are higher. If you're a bull, you say, well, look, it looks like it's business as usual right now. Yeah, trading revenues are higher and that offsets some of it, but as business as usual, that's all we need to see. Um, the thing, the thing that I think where the greatest risk is if we get surprises. United Airlines came out and they reported two earnings projections, one in a recession scenario and one in a business as usual scenario. Um, even that's not even that's it's not great guidance, right? It's not great for shareholders to say, "Hey, I don't know, our earnings will be something. We'll figure it
Yeah.
out."
And
But
that I mean, I wonder if more companies will do that, like, or maybe they'll see the reaction to it and be like, maybe we shouldn't do that. But at least
yeah,
it lays out multiple scenarios, choose your own adventure kind of guidance.
I think what would be either really reassuring or would probably put us back into a downtrend would be some real surprises where somebody is willing to call it like they see it, like, hey, we are guiding lower. We're Walmart. We're guiding lower because our tariff numbers are going to be X. And I do think Walmart actually pre-announced some numbers. I don't have them
Yeah.
just off the top of my head, but yeah, I think this has been sort of a no surprises earnings season so far.
Yeah.
I would love to see a catalyst to put us in a direction, but for the time being, the choppy sideways, the crab market is not unexpected and not unreasonable.
Yeah.
You're
It's early yet. I do think at some point, with my buy in May thing, I do think at some point earnings will be viewed as a catalyst or as an excuse for, stocks to take off or excuse on top of any good tariff news that we get. But even absent of that, I mean, it's part of why I think this sideways to maybe down action will persist for another couple of weeks because, as we said, bottoming is always a process. You know, uh, we could we hit lower than we hit, before the pause was announced last Wednesday, maybe. But I think at some point earnings, as long as they don't do harm the way they have this first week, I think they'll be viewed as a catalyst or used as a catalyst. Um, I, Clearly there have been some surprises and surprises to the downside, and those have been punished. Namely, today, United Healthcare down 22%
yeah.
after missing estimates. I don't know if there's like a healthcare takeaway as a group. I mean, even they called the results unusual and unacceptable, so it could be a one-off there with United Health. I wonder if the United Health name after what happened end of last year had a rough quarter. I have no idea. But you know, I wonder if we get more of those like misses, how if they'll be punished in the way that United Healthcare has been punished today.
I would think so, especially if they're reflecting sector trends and more than just outlier individual
Yeah,
performance. Because I think a big reason for the sell-off was that they had mentioned that Medicaid Advantage plan costs were high or
yeah,
service costs were higher. Um, it's probably too early to chalk that up to anything that's tariff related. It could be
yeah,
it could be, still that long tail of post-pandemic delayed care hitting them. Um, there's not, I don't know. I came into this earnings season hoping that there would be like some major catalyst or somebody coming out and making this announcement that really clarified things going forward. And we haven't seen it yet,
yeah,
but given the tariff pause, that's sort of been enough. Markets obviously down a little bit today, Dow disproportionately so because of United Healthcare, but S&P has been moving back and forth between flat and up and down for today. Even with Nvidia down, Nasdaq's holding up pretty well. So we do seem to be in a new normal. I would love a little bit more clarity from someone.
yeah.
Um, and I don't know who's going to deliver that. Um,
That's basically what Powell said yesterday. We
yeah,
need more clarity until we can say which direction we're going to go with rates.
yeah. So don't fire sale your assets. Don't pile in. It's probably a good place to just be in a holding pattern and keep up with your investing plan,
Yeah,
right? If it's dollar cost average, if it's your 401k, whatever it is you had coming into this environment, you just keep doing it. Um,
yeah. Yeah, I found in the two newsletters, two portfolios that I run, the Cabot Value Investor, Cabot Stock of the Week, the last week, even 2 weeks because like two total extremes. A terrible week after Liberation Day, where everything was down. And so, especially with value stocks, it's like let's give it another week and see what happens. Sure enough, this one of the best one-day turnarounds or one-day performances in the history of the S&P. So now things are almost back to equilibrium. So like have those two extremes. Now I need to see from here is where you can, I think cutting stocks wholesale in either scenario or certainly buying wholesale after that big day would have been, I think holding is a good strategy right now. Obviously, I'm sure you and I have too have cut you know, some of the more extreme underperformers because you don't want those dragging down your entire portfolio. But as of right now, it's sort of at stasis, and that's probably the way you should approach things. Just hold tight for now.
Yeah, yeah. That's, I mean, really, when they say buy when there's blood in the street, even if it's your own, or be greedy when others are fearful and fearful when
Yeah.
others are greedy. That's all just cautioning people to keep a level head. And I mean, you could position it as like, okay, well, no, you when everybody's terrified, you get extra greedy. I do think some of the bounce back after the tariff pause was attributable to big money and market makers maybe beaten caught off sides a little bit, where the market had declined further than what they had anticipated.
Yeah.
And then you probably had some short covering on the heels of that pause. So there's some sort of like under the radar mechanical stuff that I think helped to juice that a little bit. But for the time being, S&P right now, forward PE ratio 19.3. Um, that's elevated, but it's not too far from where we were midway through the 2022 bear market.
Yeah.
Um, the the odds on favorite whenever we have like super elevated volatility like this, more times than not, the market is will stabilize shortly thereafter, then start heading higher. And it's
Yeah.
like, yeah, maybe this is the 1 out of 75 or 1 out of 100 chance that no, it keeps cratering. But you can't bet on the outliers. You have to sort of assume that it's going to be some version of business as normal. I still think equities are a little bit overvalued here, and we could probably test lower, but not dropping 80%.
No, not significantly lower. Yeah, like I'm confident that there won't be another major drop, another 20% drop off. I'm not confident that the exact bottom has been put in
Yeah,
or that it won't get retested, which is why I'm saying sort of hold until May. Um, Now it can be sort of arbitrary to just, you shouldn't just go off the calendar, but I'm saying May because I think that's when the
yeah,
bottoming out process, hopefully aided by earnings, and maybe better tariff news. I don't know. Who knows? Um, Things will start to settle and be maybe a little bit clearer. So,
yeah.
yeah,
I did want to flag one last thing just while we're still close,
yeah,
while we're closing up the market talk. I have seen somebody in the White House, maybe Besant, floating the idea of delisting Chinese equities.
yeah,
If all of our, I don't know, maybe foolhardy attempts to guess where the market is going in this environment, I think are conditioned on nothing crazy happening, right? Besant is wrong that we don't delist all Chinese equities. Powell doesn't get fired before the end of his term. If those two things happen, that's going to open up a can of worms that will translate
yeah,
to significant downside volatility. But assuming that what we have seen in the last 10 days is more representative of what the market's going to look like for the next 6 months, I think it has become once again a manageable investing environment. And now it's going to be a matter of finding the leaders, looking for the positive catalysts, and earnings season. I think, you could probably get a couple of positive catalysts there if some companies, Palantir comes out and says, "Hey, we actually inked a whole bunch more contracts with Department of Defense, even though the Doge cuts are coming through." Right? you get that kind of news item. It's like, okay, well, no, they can continue to grow even in the face of
Yeah.
all these crazy headlines.
Yeah. Um, yeah, I don't have any follow-ups. I think we think we've covered it. So before we bring Madison on, want to tell people about an offer we have today, again, for today's listeners only. Um, Cabot Profit Booster, which is run by our options guru and frequent Street Check guest, Jacob Mintz. It is, we're offering it today at 40% off the normal price. You save $400 with a 30-day 100% money back guarantee. If you go to cabotwealth.com/street, Cabot Profit Booster, it's a weekly newsletter that plays off of Mike Santolo's Cabot Top 10 Trader Momentum trading service, or more investing service, which Mike offers up the 10 of the 10 stocks that have some of the most momentum in the market every single week. With sort of buy ranges and stop loss ranges. And then Jacob chooses one of those stocks for the following day. And every Tuesday creates an options trade, a covered call trade with that stock. And it's sort of a low risk way to create yield income. And that's what Cabot Booster does. Very specific, but good for this environment because it is low risk and it's aiming for singles and doubles rather than home runs. So again, if you go to cabotwealth.com/street, it's you can save $400 off a yearly subscription to Cabot Profit Booster. And again, you have a 30-day 100% money back guarantee if you want to try it out and see if it works for 30 days. And you also get free special reports, several free special reports when you sign up. Um, okay, it's time to bring on Madison, um, our producer. Thank
Who
you.
is
Hey, happy
welcome,
100th
Mads?
episode, you guys.
Yeah, it
Yeah.
sounded somewhat sarcastic, but
Well, and
uh,
to you as well. Is
yeah,
it?
to
Thank
you as well. You've been
you.
here for almost all of
Thank
them.
you.
Actually, what was it?
Thank all of, well,
Well, a few months. When you had Hallie
oh,
show. But that's okay.
is that during maternity leave? What a bummer. I can't believe I chose to have a kid instead of be here for those 3 months of podcasting.
Yeah. Well,
Yeah,
some mistakes you can't live down. It's
yeah.
I'll regret it forever.
okay.
So so many memories, Max. I mean, I know what your favorite part is. It's twice a year, the hot sauce episodes, which I mean, literally almost put me in the hospital last time. Um,
Which is my goal. That's always
yeah,
my goal. But that's actually my second favorite thing. I figured that you were gonna call it my first. My first favorite has been getting to know you guys more. I feel like learning about how you met your wives, how many people Brad's hit in a bar, like all these things have just been like my favorite by
the
a
stock
long
advice
shot.
goes, one ear and out the other, but all the personal anecdotes, yeah, are your favorite part.
Yeah. Oh, is
Yeah,
that what we talk about on here? Stocks?
yeah,
This is
yeah.
for stocks. Well, okay, but also on that note, whenever I we contribute to Hallie's little like UTMA, it's called UNES, but it's like set up like a UGMA or whatever. Every time I contribute to that, I think of Brad because that was how it all started. Was this podcast and Brad?
Great.
So Hallie's going to
I
college
don't,
because of Brad, or doing whatever she wants
Or
because of
won't,
Brad,
or won't because of Brad.
or won't.
hey, the UGMA thing I like as an option. Who knows what the college landscape's going to look like in 18 years? Rather have the kid with the opportunity to get some seed money for a new business
Hmm.
or go to trade school or not necessarily trade school, but develop a skill. I like the flexibility of the UTMA accounts.
Yeah.
Yep.
That's
Down to 17 years, right? She won now. She's won.
Yeah,
Hallie.
she's a
Yeah.
year and a half,
Year and a half. Yeah.
we
almost
still need
there,
to
almost to two.
we still need to set up this very special episode where Madison is on with Nancy and they talk about buying a house and timing that out.
Nancy Zambell.
Hmm.
Yep.
Yeah, thank you.
Nancy.
I was like, wait a sec, Nancy. Yes, I 100% because I think this is our year. So I'm real excited about. Well, I hope this is our year. We'll see. But I
What
You might
definitely have
what have been
Nancy.
highlights for you? Or lowlights? Either one. You've sat here through so many of these. Have you had to bite your tongue a lot of times when, I stumble over sentences or Brad drones on about quibits or something, what are some of your highlights and lowlights? Feel free to
I I mean,
either.
I always love correcting you guys. So
Yeah.
like Dutch Bros has been a big one for me.
Yeah, yeah.
That's a
I'm
good
glad you did
memory.
that. Yeah. I'm glad I'm
Me
not saying
too.
brothers here every single week.
Me too. We all are. We all
Yeah,
are.
the under 30 crowd that tunes in every week is has
Yeah.
wiped their brow in relief
They
that we're now
cringe
calling
every
it Dutch
time.
Bros. Yeah.
Yeah.
My teenage
Which
daughter, when she listens to us,
Yeah. I still wish we had a Dutch Bros here, but someday.
that's fine.
I when we have our summit, I'll just pack a bunch. I'll try to put them in some water bottles
Just
and
just bring
pack
the
them up.
cup, just bring the cups and put hotel coffee in there. And that's nobody's going
You
to know
won't
the
know.
difference.
Yeah, you guys won't know. Um, I don't know. I think I already said, I mean, I really hanging out with you guys has been fun. Honestly, when we first started this, I was like, oh no, what's this gonna be? And it's turned out to be one of my favorite little parts of the week. Like seriously, I know I'm real sarcastic and stuff, but it really is. Um,
Thank you.
I don't, what low light? I mean, I'm kind of used to Sam, my husband Sam uses a lot of big words that I don't know. So I'm kind of like used to that, used to being around like, or used to saying, wait, what does that mean? What is that
Right.
word? So I feel like I've gotten to practice that with Brad, which has
Yes.
So
also been
I'm
pretty
just going to
cool.
make a note here. Don't talk down to women. Sorry. Okay. Uh, yeah, I
It's more
like
of a
what you
big
said
words
there.
thing. Yeah.
I agree. This is always sort of a highlight of the week. It's nice to just be able to chit chat and to see people that I hold in high regards. It's a fun diversion, even if it's work related.
Yeah.
Yeah. No, yeah,
And
I like doing it. I think hopefully we found a rhythm that works for people and, the listener numbers sort of, seem to reflect that. So, I hope
I'm
you all
heading
enjoy
towards
it.
t-shirts.
Well,
I
yeah, we got to get t-shirts
it's
at some point.
yeah, the shirt is it's a Mads world, and then just a side
Love
profile of
that.
Madison's face, and then the back says
Done.
chemistry check.
Done.
Right?
I'll get
It's a
them printed for next week.
we'll sell them at the summit. So, Chris,
Yep.
you had originally conceived of doing a podcast. How close is this to your original conception of what it would be like?
I think it's better, honestly. I
Aw.
think I didn't really even think about, who might produce it, Madison. I think you definitely add to it. I know a lot of people, especially within Cabot, the Cabot hallways, enjoy it when you always add to the podcast when you come on. So that's why we had to have you on for the 100th. But thank you for sitting through 101 of these, or minus a few months. Um, but yeah, no, I think it's gone, about as I envisioned or better. And I like
Especially the hot sauce part.
yeah, I mean that's gone infinitely worse. But I think from an entertainment um, aspect, it's probably better than expected. That part.
I
Very
That
think
was that
entertaining
was
for
your idea,
me.
Brad, I believe.
do we retire that? We're at 100 episodes.
No.
It
You got to replace
seems,
it.
well, that's what I'm thinking. It seems that we've sort of hit the pinnacle of what we can achieve with suffering there.
I can't imagine more suffering than after the last one. The
Oh,
double dips on every time we got something wrong.
Yeah, don't stop on my account. Like if you guys are maxed out, then we can come up with something else. I will always be able to find new ways to torture you and entertain people.
Yeah, we'll figure something out. Yeah. Um, Again, if people have opinions, leave a comment or email us at streetcheck@cabotwealth.com. But yeah, Madison, thank you for supporting us and being here for us and occasionally torturing us over the last
couldn't
couple.
Always fun.
couldn't do it without you.
Yeah.
Always fun.
Well, thanks everyone for tuning in a day early this week because of the market holiday tomorrow. We'll be back regular time next week, and hopefully the market will be, in a little better shape, and we'll continue to improve, just like you and I, Brad. Hopefully, we continue to improve along with the market.
You
Like
guys
the
are
hot sauce challenge,
celebrity.
I'm long past the pinnacle of of what I will achieve.
Okay. What were you going to say, Madison?
So you guys' celebrity status, watching that grow over the last 100 episodes,
Yeah.
you've really owned it, you
Celebrities in
know?
our own minds, I suppose. But thanks again, and we will see you next week.